how much of this could have been foreseen back at the beginning? There's two parts to that. Back when the donors put their money into this not-for-profit and this baby lending operation, certainly nobody ever anticipated that it would be as large and as profitable as it has turned out to be so quickly. What we could have anticipated in hindsight is that ethical issues of various sorts would be presented when these companies eventually get banking licenses and privatize into for-profit companies. If someone had told us that this interest rate situation was going to arise, we might have thought long and hard about putting something in the agreement that would have prevented it. I must say, having reflected on this, I'm not sure exactly what we would have put into the agreement, because giving an original donor some kind of control over an operation years after the donor's project with the company has been closed puts the donor in the role of a shareholder rather than a donor. And generally, donor agencies are very poorly equipped to serve as effective shareholders. But having said that, I do think that this situation is one that is being repeated many times, not in the sense of these extreme interest rates and profits, but many microfinance institutions that start out as not-for-profits and get public money, including grant money or very soft loans, to support themselves, then do turn into for-profit companies, and there are a bunch of conflicts of interest that can get created when that happens. And we need to think a lot more about those possibilities when we make original grant agreements. The other question, in terms of could anyone have foreseen this, is, well, at the time that the private shareholders bought into the company, was the price that they paid for their shares, was that a giveaway? You know, this goes to the whole issue of the risk there was in the investment at the time it was made, and if IFC was being treated to a giveaway price, no one in the organization thought so at that time. I think that the highly successful public offering of Compartamos shares 2 years ago added energy to the entry of other actors into providing microfinance services in Mexico, but that was already well underway before the initial public offering. Now, to be fair, if Compartamos had made zero profit, I don't think it would have attracted many private competitors into the market. So the high profits that Compartamos made certainly deserve credit for bringing in more providers into the market and the competition which is starting to develop right now. The question is, how high did that profit have to be in order to produce that effect? That's a judgment call. You know, my own feeling is that profits that were considerably lower would likewise have been successful in pulling private competitors into that market.